where you are is only a place to start. And so I think a lot of times people look at that person who's getting 100 clients a month and be like, oh, I wish I could do that. It's like you can, but you have to build up to it, right? They didn't just start doing that yesterday. It's been a buildup of years and years and years.
Y'all, today's show is so good.
But number one, I've never seen an intro like that.
It is my hope and desire that not only will episode 30 still be fun, but episode 300 will be even more fun. You are made for something great, so go and be awesome.
Ten seconds remaining.
And welcome to the show. My name is Renee Hastings, and I'm your host of Renee Speaks. Y'all, today's show is going to be so good, and that's because of our amazing guest. Her name is Shena Marie White, and she knows the struggles of being overwhelmed by sales and bills and constantly feeling stuck. Now, Shena helps business owners transform their work from stress and chaos into a well-oiled, profitable machine, guiding them toward financial freedom and the lifestyle they've always dreamed of. Y'all, put your hands together for Shena White. Shena!
Hi, thanks for having me.
Absolutely. How are you doing today?
I am good. It's very cold here in Denver today, but I'm trying to stay warm.
Yeah, there's a winter storm going through or something.
Yeah, we got way more snow than I wanted yesterday, and it's still very, very chilly today, but that's okay. I live in Colorado. I should be used to it by now.
Right. Well, I'm originally from Wisconsin, and I purposely moved from Wisconsin to get away from the snow. So I moved to Georgia, right? What do you think is outside on the ground in Georgia today?
Snow.
Oh, yes.
It came for you.
It came all the way here. So yeah, we are. It's fun for our new granddaughter who's never seen snow before. So that was pretty fun. We got to FaceTime with her a little bit this morning and see her playing out in the snow. That was pretty fun. But anyways, I'm glad you're staying warm. I'm glad you're able to take a few minutes out of your day today to share with us and talk to us a little bit more about you, who you are, your journey, how you help people, what our audience can take from your experiences to not have repeats. Of the bad things and yes, definitely repeat the good things. Mm-hmm. So yeah, why don't you tell us a little bit about your journey before you changed your cash flow strategy? My tongue is not working today. Cash flow strategy.
Yeah, so it feels like a lifetime ago, but many moons ago, I used to own a concrete repair, coating, and polishing company. And for the first few years, we were making it work. I'll say that, because we had enough money flowing through the business to pay the bills and kind of have a little bit extra to pay ourselves. Not really, but we were investing and we were like determined to make it work. Well, 3 years into owning our business, it was me and my now ex-husband, we found out that our accountant was embezzling all of our tax money. So every single dollar we thought we had paid the IRS, specifically our payroll taxes, actually had gone into his pocket.
Oh my gosh.
Yeah, it was an epic mess. Like, I was literally driving down the road, listening to the radio, and this guy, the troubleshooter, who I don't really like, but I was listening to him that day for some reason. And he said the name of my accountant. And he's like, if this guy's your accountant, it's a real bad day for you. And I almost ran off the road. Like, I was like, what?
Gosh.
Yeah, and so they were our accountants, our bookkeepers, our payroll people. They did all of our finance stuff because
Oh,
I was the
no.
salesperson and I had two little
Right.
kids. Like that was what I was doing. And it was so awful. And then all of a sudden the IRS is wanting me to produce 3 years of documents that I don't have. I don't know how to produce. I don't even have any of the paperwork. I
Oh,
mean,
because you just trusted the guy. You just trusted him.
yeah, huh? Because why not, right?
Right.
He was a professional. He was well respected. I mean, he was referred to us by multiple people. He was the best. Yeah, and so at that time, then I didn't trust anyone, right? So I'm like, okay, I have to
Mhm.
figure this out.
Mhm.
So over that next year, figuring all that out, I also started to look at other things in my business. Like why are we paying for this? Why are we doing this? Like just really asking the question why a lot.
Mhm.
And in that process, not only was I able to deal with the IRS and get on a payment plan, but um, because he sold the taxes from us, we still had to pay the IRS.
Right, right.
Um,
Oh my
yeah,
gosh.
and I was able to take my business from 4% to 24% profit in that same year.
What?
And then I was able to scale the business from there to 7 figures.
Oh my goodness. Now we definitely want to know the secrets to that. Like all the secrets. We need to know everyone because gosh, what a traumatic experience, number one.
Mm-hmm.
But I'm a woman of faith. I believe everything happens for a reason.
Me too.
And what better time and opportunity to learn all these things about your business than a
Mm-hmm.
situation like this, So even though it was a bad thing and it was totally traumatic, I'm sure it had to
Yeah.
be, when you
Oh, it was awful. Like, I mean, I, I would not, I can't even like think about how it felt at the time because we were just so in it, right? And then like I
Mhm.
had a IRS agent on speed dial for real, like a human from the IRS that I talked to almost every single day for months.
Wow.
Yeah.
Oh my
And she
God.
was nice, don't get me wrong. She
Mhm.
was actually really kind and she felt
Mhm.
terrible about the situation, but there was only so much she could do
Right,
because the rules are the rules.
right, exactly. But holy camole. So
Yeah.
in the end, though, you came out on top.
Hmm.
Thank the Lord.
Yes.
And now you are here today to tell the story.
Yes. Yeah, I mean, I learned a lot. I think the first thing that I learned is that trust but verify, right? Because I
Mm-hmm.
was so trusting of this other human and I didn't know what I didn't know. And so I
Right,
didn't even think to check anything or double check anything. I really didn't have any grasp on my business finances. I was the salesperson.
right,
So, like most entrepreneurs, if there was money in my bank account, then I could afford it. And if there wasn't, then I couldn't. And, at
right,
the end of the day, whatever the guy said, that's how much I needed to pay in taxes. And that was
right.
kind of my level of financial finesse or, of
Mm-hmm.
education when it
Mm-hmm.
came to my business. And now I realize that is just, it's not enough. It's not enough to really make informed decisions to be able to effectively grow your business.
Right, exactly. So thank goodness that you had that IRS person as a resource to be able to help you navigate this whole situation.
Hmm.
Maybe even sometimes I'm sure pointing you in the right direction of what report to pull, what
Yeah.
documents you need, and all of the things, right?
Yeah, I had to create my all of my financials over from scratch just from the bank statements. And so I went through, I mean, I went to the library and I got the biggest books I could find on business finance and I just read voraciously about, how to do QuickBooks and how to
Mhm.
do, the reports and I had to do so many amendments because all the reports had been filed. They were just wrong. So I had to do amendments, which are much more complicated than the original reports. But then it really made me take a hard look at what we were buying and what we were selling.
Mhm.
One of the main things I did was looking at the individual things we were selling and said to
Mhm.
myself, okay, what is the cost of this item?
Mhm.
How much does it cost me to produce this product for my client? And
Mhm.
then, like, is this profitable? And I realized that one of our main items we were selling was not profitable. Like, we
Mm.
just couldn't charge enough because of the amount of labor that went into it to make it worth it. And so we switched our marketing to one of our other items that was extremely profitable. I mean, like, it was like printing money. So we switched all of our marketing to the most profitable item. And then we just had the other item as fill in. And
Wow.
that huge, I would say that was probably one of the main things, is just making sure that all of our marketing and really pushing the profitable item first
Mhm.
was really important.
Wow. Yeah, I
Yeah.
can imagine. So, because there's certain numbers that
Mhm.
business owners know, and so if someone asks you, well, what's your profit margin on a particular item, it should be able to just kind of roll off the top of your tongue. But if you're in sales, it's like, I don't know, I just sell what I sell.
Right? You're like,
You
I
know
just
what I
sell
mean?
it. I go out and I sell what people want. Okay. I keep the calendar full. And if the calendar's full, we're good.
Exactly,
Yeah.
exactly. So it's good that you figured out, though, the
Mhm.
relationship between what it costs to produce something versus what you're actually getting from it, the revenue that's
Mhm.
coming in as a result.
Yeah.
So if it's costing you $20 to make something you're selling for 10, it's
Oh
an
yeah, that would be
automatic
super
no.
hard.
Yeah.
Yeah.
So, yeah, that analysis is so necessary, especially if we're thinking about expanding our service offerings.
Hmm.
So maybe we, started with a particular line of widgets or whatever, and it was going well, and we want to add another widget, different kind or whatever, but it costs twice as much to make, or the, audience is only half as much, or whatever it looks like. It's
Yeah.
just not good business sense to make that decision and to go that route.
Yeah. I mean, and for us, if we were doing fill in or something, it wasn't necessarily we were losing money. We just weren't making money. So if we wanted to
Mhm.
keep the guys busy, or, if we had a client that specifically asked for that service, well, then we're going to offer it, right? But it's not
Mhm.
anything that I'm going to spend money to gain more clients for.
Right, right. And that makes total sense. Total
Hmm.
sense. So when you were overcoming these challenges, so
Hmm.
would you say that that was the biggest cash flow challenge you had, was figuring out what was profitable, or was there something else?
Was a lot of things. I mean, one of them was figuring out what was most profitable. Another one was how I was buying my product, right? Because we were producing the same service over and over again, and so we had a lot of products we could buy in bulk. So
Mhm.
I went to my suppliers and I negotiated a very specific rate on my product. So I actually, when everybody else in the industry was taking a price increase, I was able to negotiate a price cut because I agreed to buy a specific amount of product every single month, even if I didn't have clients. Because we had a warehouse, so I was like, okay, well, I'll use it in the summer and I'll just buy it in the winter. But you
Mhm.
have to be able to cash flow that, right? I had to be able to know that I would have the cash in the bank in order to pay for that product when I didn't need it.
Right. Well, and it had to be, I'm thinking the word sustainable, but have a shelf life that would
Yeah,
live
I mean, it was
into
like,
the time when it could be used.
yeah, it definitely couldn't be anything that would go bad. Like, we were doing concrete sealants, so I mean,
Right.
it was a bucket of chemicals that doesn't really go bad.
Yeah, they don't expire. We're good.
Yeah, yeah, yeah. It's probably still good to this day. So.
Oh, that is funny. So, but that's definitely something that, our audience needs to keep in mind when it
Mhm.
comes to assessing or doing an assessment of your cash flow and an analysis of your cash flow. is, what are you buying? And are you taking full advantage of volume discounts and buying in bulk or buying off season? I love how you bought it in the winter, even though you weren't going to need it till the summer. You know what I mean? So all of those things are so key to improving your cash flow.
Yeah, because that was the only way to get the discount that I wanted from the supplier, right? Because they slow down in the winter too. So for me helping them out and basically buying this product that they weren't selling to anyone else in the winter to help keep their numbers consistent, they were more willing to give me a discount on the actual product itself.
Right. So it's a win-win.
Yeah,
absolutely. So good. That is fantastic. And so would you say that that's the first step that you'd recommend to businesses who are looking to improve their cash flow, is to start renegotiating to negotiate the pricing that they pay for particular products, or should they start somewhere else?
I mean, I think everyone should always negotiate with their suppliers. I actually, before I was an entrepreneur, I was in corporate sales for a distribution company. So I remember the margins that I had on certain clients. Let's just say they needed to negotiate better. So, yeah, I mean, I think people think their suppliers are like Walmart, where you go in and it's the price. But a lot of your distribution companies, it isn't. It's you can negotiate, and what you're paying and what your competitors paying could be vastly different. So I definitely think that's a place you can start. For me, it really depends on the company themselves, what they should start with. But the first step is really just to look at things and see where you're at. And look at your, and analyze your P&L and your balance sheet and say, okay, is my cost of goods too high? Like, what are my gross margins? So what is my income after I take out my cost of goods sold? And if that's too high, then yeah, you need to look at, okay, are we overbuying? Or we have waste? Do we need to negotiate with our suppliers? Those are some great places to start. But maybe your cost of goods sold is great, but your overhead is too high. So then you would look at that and say, okay, am I spending too much on marketing and not getting the return? Where am I getting my clients? I had one client that had just an exorbitant amount of office staff. Like, they just kept, I mean, it's one of those things that just happens. Like, you're like, oh, I need a person for this. And you just hire someone. And so they just kept hiring and hiring and hiring to the point where it was impossible for them to be profitable because all of their money was in office staff. They're a construction company. So, and we've now cut their office staff by like 75%. Sorry.
Wow. Well,
no, like the business has not had any issues. And now they're actually in a place where they can think to be profitable.
Right. Well, and it's good that they have somebody like you on their team who can ask the right questions, who can know the questions to ask, show you how to actually get the answer. Because not every entrepreneur knows how to read their financial statements, like a balance sheet, profit and loss statement, your all the things that you need, the cash flow and all of those. Not everybody knows, well, what is a good number? How do I know if this is a good number? And what numbers impact this? What numbers fall into this bucket, So thank goodness for you, Shena White, fractional CFO. You can now help people, who have materials, or, goods that they're selling with their business, to help them weigh the pros and cons of continuing to do things the way that they're doing, or make suggestions for what they need to do differently. And would you say that also applies to service-based companies, service-based businesses?
That's exactly what I was just about to say, actually. Yeah, because to produce the service, right, you have labor and you have other costs that are associated with the actual service you're providing, right?
Right.
So the way I look at it is hard costs, so stuff that's going to happen whether or not you have a client, like stuff that you're going to have to pay whether you have a client or not. That's your hard cost. That's your overhead. So things like rent and insurance, whether you have 100 clients or one client, your rent stays the same.
Right.
So, but things that are directly impacted by the amount of clients you have, that's your cost of goods sold. So if you're a service-based business, like for instance, we'll take the VA business that's the sponsor. They have the VAs, and then they have, so the cost of the actual VA, that's the product, you're selling. So their labor cost is your cost of goods sold.
Okay,
because
got it.
you have more of them when you have more clients, and you have less of it when you have less clients.
Right. And so is it hard to forecast then when you have such fluctuations in staffing? And
I mean, yes and no. Like, I work with some law firms that we were forecasting our needs in terms of attorneys and staff, a year and a half out, because sometimes great staff can be hard to find. So we want to create capacity and then fill it up. But we know like our run rate and our goals for leads and conversions, so we can and we know kind of like the averages of a client and their kind of their lifetime value. And so we can kind of forecast out how many we need based upon that. So you just really need to, that's more like delving into the minutia of the numbers. Like, okay, now we're going to look at, if we have 10 employees and they can service 100 clients. If we want to get to 1,000 clients, we need 100 employees, but maybe we don't because there's some overlap and yeah, so then we can really play around with it. That's actually where I really love to be, is because I love spreadsheets and projections and playing around with the forecasting.
I am not your people. I'm sorry.
But see,
that is like,
right? Actually, you're your people, because I can help you make decisions based upon
exactly. It's like whenever I get a spreadsheet in front of me, I'm like, okay, here we go again.
Well, and I think that's why, like, I'm so kind of unique, is because a lot of, like, you have your bookkeepers and they do your books and they do data entry and they kind of tell you what is, right? Like,
right.
This is what is. And you have an accountant and they do like the tax filings and all the IRS stuff, because I don't do any of that. No thanks.
Right.
I see IRS forms make me want to die. But and they can tell you, they can do some tax strategy, and okay, if you did this, you pay less taxes and things like that. But when it comes to really looking at things like capacity planning, right? A bookkeeper doesn't do that. An accountant doesn't do that. And that's something I love, right? And so it's like looking at what your numbers are telling you and how to make decisions, because you're here and you want to be here. And so how do we get there, right?
Right.
How do we go from where we are to where we want to be, utilizing our numbers as a guiding light for the path forward?
Right. And that makes perfect sense. And it sounds like for the example you used with the law firm, that you have lawyers on deck, or like, in the wings waiting.
Yeah.
So that when the opportunity comes for more work, then it's like you already know who you have on, in the wings that you can pull from.
Yeah, we're always, like this, a couple of my clients, their law firms, were always hiring. No matter what, we're always hiring, because if our marketing engine is working the way we want it to, we have to always be hiring, because we're growing at a consistent pace. So we're going to fill up the attorneys we have always. So we need to be bringing new ones on.
And until they actually get an assignment, though, or get a case, then they're just waiting.
Well, so usually we have enough at this point where, like, nobody's just waiting. So we have, like, one of my clients, they brought on almost 100 clients last month alone. So there's always more than enough clients to go.
I want their salesperson.
What?
I said, I want their salesperson.
Well, yeah, there are a few of them. It's a pretty big organization. So.
Wow, 100 new clients in a month. That is a lot of new clients for a law firm.
Yeah, so. But you have to start somewhere, right? So I have, another client that they hit their first $1 million year, and it's a huge accomplishment, because a little over a year ago they were only at $250,000. So we basically quadrupled in a year and a half.
Yeah.
So wherever you are is only a place to start. And so I think a lot of times people look at, like, they'll look at that person who's getting 100 clients a month and be like, oh, I wish I could do that. It's like, you can, but you have to build up to it, right? They didn't just start doing that yesterday. It's been a buildup of years and years and years.
Right, exactly. You put in the work and then it shows up.
Yeah.
Later. Just put in the work. Keep doing what the smart things, and the things that are working. And then, it will happen. And I know that it will happen. And so, and I love how you said, start where you are. It doesn't even matter how much revenue you're bringing in, the top line, bottom line, doesn't matter. Just start. That's the thing. Just start taking a look at where you are and maybe set a goal or two, different things that you're going to do to, strategies you're going to put in place to move the bar, move the needle to get to that next level that you want to get to. I think starts with a big dream. Do you know what I mean? Like, you have to have a vision. You have to, I read this book called The Circle Maker.
Okay.
And I believe it was Patterson was his last name, and of the author. And he said something about these big, hairy, audacious goals, BHAGs, he called them.
Uh-huh.
And so I think it's important for entrepreneurs to have those BHAGs that they know that is like completely out of the idea of even being conceivable, but their mind is big enough to just dream like this big thing that they want to accomplish. And if they at least set a bar that this is a BHAG, a big, hairy, audacious goal that they have, they can just start taking baby steps toward that and, keep doing all the things that they're supposed to be doing. Of course, I'm a woman of faith, so I pray about everything. And it all, when you're living out your purpose, it falls into place,
Yeah, no, definitely. And I love BHAGs. I think, actually, I've never read The Circle Maker, but I think Jim Collins, who I'm like obsessed with, he first talked about it in Good to Great. And, your big, hairy, audacious goal and really setting that as the bar. And then Mike Michalowicz in Clockwork, he calls it a B-Bang because he called it a big, bold, audacious, noble goal, because he said that you should add in some sort of like you're helping others or make it not necessarily about the money or about yourself. It's like, for me, my goal is to help 1,000 entrepreneurs become millionaires through their business alone.
Aww, and awesome. I love that.
Yeah, because it's you can't do great things unless you have great income. And so the more that we can help great people have great income, then the more great things they can do in the world.
Absolutely. 100%. That is very noble. And Mike Michalowicz, I'm reading a book by him as well. It's called Profit First.
Yeah, no, I love Profit First. I actually went through Profit First certification many years ago. Yeah.
Oh my gosh, that's exciting.
Yeah.
So did you use the concepts to get yourself out of where you were to where you are today?
Yeah, I use the concept quite a bit. I use it with some of my clients and things like that. I specifically we do a lot of allocations for their cost of goods sold depending upon what the client is and things like that. Yeah, I run those, like the percentages and seeing where people are at pretty much all the time, just because I think it's a great way of looking at it and really setting aside money and deliberately deciding this is where my money is going to go.
Right.
So a lot of times people will be like, oh, I want to pay off debt. It's like, okay. Well, what they don't realize is that paying down debt is actually not tax deductible. So if you owe $100,000 and you pay that all off in the year, you have to pay taxes on that entire amount. Because you get credit for it when you buy it, not when you pay it off.
Wow. So, yeah, I'm sure so many people don't know that.
Yeah.
Wow.
So that's why a lot of people, they'll look at their profit and loss statement and they're like, this says I made all this money and I have nothing in my bank account. What are you talking about?
Right.
Because any of your debt servicing or your principal payments do not come off of your profit and loss statement. Your interest does, but not the principal. Do not come off your profit and loss statement as an expense. So that's why you have depreciation expense, because you can depreciate that thing. But if you took, say, accelerated depreciation and you depreciated the whole thing the first year, year 3, when you're still paying for it, you get no benefit tax-wise.
Right.
So
right. Fully depreciated.
Yeah, because you've already depreciated, you've already taken all the tax benefit, right? You already got all those credits. And so that's where the difference between cash flow and profit and taxable profitability come in. And so we have to balance both of those. And especially, I work a lot in construction, and I see this a ton with companies that buy a lot of equipment, because they'll take these huge depreciation expenses and then they'll have all this non-taxable income, and they're like, yay. And then a few years later, they're like, oh crap, now I have these huge bills to the tax man, and I didn't make as much. Why is this happening? And that has to do with that a lot of times. So yeah, so making sure that our allocations, I love Profit First. I actually love all of Mike Michalowicz's books, so you should read them all. They're fantastic.
Yes, the Pumpkin Plan, the Toilet Paper Entrepreneur, all of them.
Well, Clockwork, All In. He's great. Jim Collins, Good to Great. Great by Choice is my favorite. I'm like a Swiftie for Jim Collins. Totally obsessed.
I love that.
He's fantastic. I've read all of his books. I will read them again. Yeah, and then my favorite one lately is actually 10X is Easier Than 2X by Dan Sullivan from Strategic Coach and Ben Hardy, and it's phenomenal. So if you haven't read that one, definitely read it. I love books.
10X is better than 2X.
10X is easier than 2X.
Easier than 2X. Okay, got it. Okay, we'll definitely make a note of that one.
Yes, yeah. If you ever need book recommendations, just call me.
Yeah, because as we're, learning all these things about our business and cash, especially if most of us didn't go into business to manage the finances.
Yeah,
Most of us went into business to, earn a living, make somebody's life better, provide a service, whatever, it looks like, not to manage numbers.
Right. Yeah. No, I think, even me, right? I was a salesperson. I had zero intention of doing what I do now. Like, if you had told me 15 years ago that this is where I would be, I would have probably, I would have laughed at you so hard. But I absolutely love what I do. And so I'm super grateful for the path I was taken on to where I am now, because I love helping people understand what their numbers are trying to tell them, and then use that to fuel their success going forward, instead of feeling like their bank account is stifling and controlling them.
Right, exactly. And that's one of the things that Mike Michalowicz was mentioning in his book as well. Like, your business is not supposed to be some Frankenstein monster, eating up all of the profits and that sort of thing, but you're actually supposed to be getting joy out of running this business. Right. And it doesn't have to be this revenue sucking machine, but a revenue generating machine. And when you figure out how to take profit first, even when you're paying off debt, then it's a win-win all the way around. I'm really enjoying the book.
Yeah, well, he talks a lot about Parkinson's law too, which I think is really important. And it says that as humans, we will naturally use up whatever is available to us. Yes. And the less that's available to us, then the more ingenious and that we will be. So his great example is the Apollo mission. I think it was Apollo 13, where the air scrubber broke. When they're in space, and the air scrubber has broken. Well, that air scrubber cost $5 million. And we're talking this like the 70s, so $5 million in the 70s. Like, let's think about how much that would be now.
Yeah,
crazy amount of money, right?
Yeah.
And they had to take only the things that are on the ship and figure out how to make a new one, and they did, and that one cost $5.
What?
Yes.
Okay, I haven't gotten to that part in the book.
Okay, so I listened to the book, And so I'm not sure, and I've listened to him talk a million times, so I'm not sure if this is an example that's actually in the book,
Oh,
or just one
okay.
he's used other times. But the moral of it is that when we are constrained, we become really ingenious and we figure things out.
Yeah.
But when we're given a blank check, we just spend.
Right.
And this, even you see this happening even with people, you know, that are living paycheck to paycheck, and then they get a raise, and then 6 months later they're living paycheck to paycheck. Because
Right.
naturally, when we have it, we use it. We have it, we use it. We have it, we use it. So we need to back that down so that we can create those profit margins that we are searching for.
Absolutely.
Yeah.
I'm sorry. In the book, he used an illustration of the tube of toothpaste.
Yes.
How when you have a tube of toothpaste, you'll just put a strip on the whole brush, you know, because it's like, oh, there's so much more where that came from. But then when you get down to the end, it's like you're twisting and turning and squeezing out, and then you use like just the tip. He called it a turtle head.
Yes.
It's so funny. That book is so funny to be a finance book. I just thought I'm just really, really enjoying it a lot.
Yeah, he makes finance not boring, which is exciting. I like it. Yeah, he's great, and you should hearing him speak. He's really great. He's very engaging. So
yeah, I love that. And he also talked about smaller plates, that when you use the smaller plates, then you tend not to eat as much, and then you're healthier lifestyle, that sort of thing. And so when you take your profit first and you operate on less, it helps you to be more creative, to figure out how you can make do with what you have, how you can stretch every dollar, because you only have this much now. You don't have the whole thing that you had available, which he did. That's the Parkinson's. I want to say disease. It's not a disease. It's
I mean, and I think the one caution that I would give, just based upon my experience, is any sort of like credit or lines of credit that you have with your suppliers or things like that. Because what I've seen, and I had one client specifically that I'm thinking of that this happened to, is he had all these allocations because he was trying to implement profit first on his own. He had all these allocations that he had decided upon, but then he was utilizing credit from his suppliers. And so he actually was way overspending his allocations because he was only taking, so he had like 20, we'll just say 20% that he was going to send to his suppliers. He would send them that amount, but he wasn't keeping track of how much he actually owed them. So then when the season was over, because this was a contract, it was very seasonal, he owed them this ton of money and he didn't have the money. And he's like, I don't understand. I allocated. Like, yeah, but you allocated, but you used credit lines. So you overspent your allocation. Like,
yeah.
So, and this happens, I've had clients that this happens on credit cards too. So my one main caution, if you're going to do this, is just make sure that you're not accidentally overspending your budgets utilizing debt.
Right. Because the idea is to get out of debt while you're building wealth, increasing your revenue. So anyway, so it's been such an education, you know, just trying to be better, do better, get to the next level, you know, that sort of thing. So it's super exciting that you're like a certified profit first financial professional to help people on their way. And I can certainly see how with implementing that system and all like your other knowledge that you have, you're going to easily reach your goal of 1,000 people becoming millionaires, you know, implementing this system. So that is fantastic. I'm excited for you.
Thank you. Yeah. I mean, I remember what it was like to be struggling in business. And then I know what it's like to not be struggling in business. And not struggling is so much better.
Yeah, agreed. So what would you say then, Shena, is one of the most common cash flow mistakes that you see entrepreneurs making? Is it the taking out too much credit and not knowing how to pay it back? Or what would you say it is?
Oh gosh, the number one thing. I would say the number one thing is just only making decisions based upon your current bank balance. So many
only
people
making decisions based on your current bank balance. Okay.
Yeah. So what they'll do is they'll look at their bank and say they have $10,000. And so then they want to buy something and it's $8,000. So like, well, I have $10,000, so I'm going to go buy it. But they're not thinking about payroll next week and what might be coming in. They're not thinking about rent 2 weeks from now, right? They're not projecting out. So then the next week, if money doesn't come in, then they don't have money for payroll because they already spent it on this other thing. So they're making financial decisions based upon a snapshot of one day versus really the holistic picture.
Right. Oh my goodness. That's so payroll is like right up there with rent and telephone. You know, it should be like right at the top. You don't miss those, you know, you always have to have that available.
Yeah.
And so what advice then do you have for any entrepreneurs who might be feeling stuck? Like they can't, like the person you're working with who they're like, they just can't get it together, figure it out. Like, why does their statement say one thing, but then their bank account says another?
I mean, I think my biggest advice is just to first, just don't freak out. And second is to truly be honest with yourself. My biggest thing with like the client I was telling you about with the allocation, he's like, I don't understand. I did the allocation. Why isn't this working? He refused, even after months, refused to truly be honest about the actual issue. It's like, you know, GPS. So strategy to me is like turn by turn directions, right? Any strategy will get you somewhere. The question is, will it get you where you want to go? So to actually determine that, you first have to know where you want to go. So what's your BHAG? What's your vision? Where do you want to go? But the other part of that is you have to know where you are. And I feel like so many entrepreneurs are so obsessed with where they want to go that they refuse to be honest about where they actually are. But where you are is only a place to start. So don't feel bad about wherever it is. I mean, when I started, I was $70K in the hole to the IRS and had made $20,000 the year before completely in income. It was a terrible place. It was awful.
Wow.
But in being truly honest about that, I was able to then figure out the strategy that would take me to my goals. Because, you know, strategy is only as good as knowing where you are and knowing where you want to be and how it's going to take you there.
Right, exactly. And it's so important. I'm sure you would agree to have people in your corner who can help you navigate through that and help you understand what's happening, how to fix it, and then like hold you accountable for doing all those things that are required to reverse this situation. Because if you don't do something drastic, it's going to continue in the same trajectory. And if you're going down, that just means you're going down faster.
Well, I mean, and even if you're not going down, but maybe you're just not going where you want to go. Maybe all the strategies you're employing aren't taking you where you want to go. And a lot of times it's because you know, if your starting point you said was here and it's really over here, then that's not going to take you to the place you thought you were going to.
Right. Absolutely. 100%. So accountability is important.
Oh, yeah.
Following the guidelines that you're given. So get a good person in your corner who knows what they're doing, knows what they're talking about. Shena White is here for you.
Shena White is here for you.
I'm just going to shout you out because the service you provide is so invaluable. I mean, it's priceless, priceless. When you can go to work and not worry, not have to worry about if you can make payroll, not have to worry about if there's 3 pay periods in a month, not have to worry about, you know, all the things that are required to make your business run. And you can sleep. You can sleep well, you can rest well, you can live a good life. You implement it. You have someone on your team who's helping you understand what is happening, know how to fix it to get you where you want to go. And then all you have to do is be obedient and follow the instructions.
Yes. Yeah. You know, and I'm very collaborative with my clients. Like, to me, it's, you know, it's not me telling them what to do or them, you know, doing it. It's a very collaborative, like, where do we want to go? How do we work together to make this happen? How do we create a plan for you that's doable, that you feel good about? that gets you to your goals. Like I love kind of like co-creating with my clients their vision.
That's awesome. I love that. So, how can our listeners stay in touch with you, like after this show and into perpetuity, as long as this show is on the internet? How can we reach you?
Yeah, so my company is Your Pocket CFO. And anywhere there is a social, I am Your Pocket CFO. And then my website is yourpocketcfo.com.
I love it, love it, love it. Beautiful websites, LinkedIn profile, Instagram, all of the things. So we can definitely reach you and stay in touch and learn more about how to just make life easier and have more effective cash flow in our lives. So that should be the number one of the number one priorities of every entrepreneur. Be profitable.
I mean, if you're not profitable, then you know, what are you doing it for? Like,
right.
That's
exactly.
The point of the game is profits.
Absolutely. 100%. All right, Shena. So last closing question. Is there any question that I should have asked you that I didn't?
Oh, I don't think so. I mean, yeah, we talked about how I started and like all the fun spreadsheet things. So.
Okay, so there is one question that I didn't have on my list that I want to know. And that is, when you did become profitable and you saw your business moving toward that $1 million mark, what was that like for you emotionally, mentally, physically? What does that mean?
Oh gosh, that was a difficult time with that business because I was not in a great situation in my relationship, and we owned that business together. So I didn't really get to enjoy it at all.
Aw, thanks.
Now I can say in my current business, last year I tripled year over year. Yay. And yeah, thank you. Yeah. So looking back at it and seeing, you know, and then looking at my goals for 2025, it's really, it feels good to be able, I guess for me, the biggest thing is to be able to say yes to my kids more than I have to say no, right? I'm trying not to spoil them too much, but you know, just to have the ability to say yes is awesome. Like you know, when they were little, I barely had money for food, so I certainly didn't have money for anything extra. For years, I didn't buy myself new clothes. I only shopped at like Goodwill. So now to have the freedom and the ability to say yes to my family and say yes to myself is pretty freaking awesome.
That is awesome. I am so happy for you. I'm so proud of you for your resilience and how you've overcome such trying times, traumatic situations, and flourished, and are you just flourishing on the other side. And you are such a blessing to us entrepreneurs and everyone in our audience. I'm so grateful to you, Shena. So you were made for something great. So go and be awesome.
Thank you so much. Thank you.